Hello everyone, welcome back. I hope your day is starting off just great. It's early morning here. It's almost time for my yearly haircut. We're going to start this video here by showing you this beautiful pic posted in the I Choose Canada group by Carrie, who wrote, "My son is in the Canadian Navy," and he snapped this picture on his way to work this morning. This is a beautiful shot of Halifax. Thanks for sharing this pic, and may I say to your son, thank you so much for your service. In this video, I want to go over some recent economic news and how the world is adapting to the new reality of USA tariffs. Because a lot of the media and the stories that we hear are always painted as either winning or losing, whether it's a win for the United States or a loss for Canada or China or whatever. More realistically, what's going on, that the world is adapting and changing, and corporations are making decisions that you might not have expected that they would make. And this is going to continue as the whole world realigns based on the new economic realities that we're in. And I'm going to make the case to you that we Canadian consumers have so much more power than we realize. We are holding all the cards, and I'm going to explain. The newest news for Canada is the report on inflation. And the headline is, "Inflation in Canada picks up steam, rising to 2.4% in September." Now, these graphs are provided by Statistics Canada, and they show the annual inflation rate. The graph on the right shows shelter costs, which includes rent. And you can see that that has actually been going down and is now within the target range. But the one sector that's causing this recent bump in inflation is grocery prices. And grocery inflation was within the target range for a number of months, but has now recently started to move up above that 2%. And one of the biggest reasons that grocery prices are going up, Canada imports most of its vegetables from the United States, followed by Mexico. The US is the largest supplier by value, providing a significant percentage of vegetables like spinach, lettuce, and onions. Now, I refuse to buy any US vegetables when I go to the grocery store. I think for about a month last winter, I ate nothing but rutabagas because they came from Canada. But apparently a lot of people still buy US produce. And when you look at US media, like this headline here on USA Today, grocery prices are jumping up. Prices could continue to rise because of continued crackdowns in immigration policies and on undocumented farm workers as the cost of labor increases. So we are inheriting some of their inflation. So I wouldn't really worry too much about an uptick in 1 month's number for Canadian inflation. We've generally seen low inflation, but as I've mentioned in many past videos, tariffs make everything more expensive and are not good for anybody. So there is price pressure because of the tariffs and because we trade a lot with the United States, and that's manifesting in our economy. But let me tell you now about an unintended consequence of the tariff world that we live in now. And I discovered this not by doing research online. I discovered this when I took my car in for an oil change just the other day. I own a Subaru Outback Wilderness because I enjoy the outdoors. I have my secret fishing spots that I go to, and that's the perfect vehicle for me. And when I bought it, I didn't consider at all where the vehicle was being manufactured. And that particular vehicle was manufactured in the United States. Well, put together, not manufactured. It was assembled in the United States. And when I took my car into the dealer to get an oil change, I was talking to one of the salespeople and I said, well, it's too bad that these cars are made in the United States because I won't be buying any more vehicles that are made in the United States. I'll have to consider buying something else, maybe a RAV4, because it's manufactured in Ontario. And he said, no, wait. We've just been informed by Subaru that they're going to halt production in the United States of the Outback and have it produced in Japan. The vehicles that they intend to sell to Canada, they're going to move that production to Japan to avoid the tariffs, to avoid the higher cost of production in the United States. So I researched this. Subaru pulls Canadian production from US as Trump's tariffs deal a heavy blow. The automaker will now build more cars for Canada in Japan rather than in Indiana. And I think this is great news because I happen to like Subarus. Now, why did they do this? Why did they make this move? Because of the tariffs. The cost of production is going to increase tremendously if they manufacture in the United States because some of the inputs to the vehicle are steel from Canada, aluminum from Canada. And at the time that they made the decision, they were worried about Canadian retaliatory tariffs, 25% tariffs on imports of cars from the United States. So to escape from all that uncertainty, they're simply going to manufacture products that they're going to export to Canada in Japan. They can avoid the whole mess by leaving the United States. And of course, you probably haven't heard this consuming North American media because this is not a big win for the United States. And it's funny, when you look at the broader picture, Japan's exports and imports grow in September despite Trump's tariffs. Japan is simply pivoting, and their exports grew 4.2% in September. Japan's exports to Asia jumped 9.2%. They're just rearranging their customer base and their supply chains. China's exports to the US have declined, but its overall exports are holding up as a result of robust growth in other markets like Southeast Asia, Africa, and the EU. Even though China's exports to the United States have dropped 25%, their overall trade has increased. Canada is doing the same thing. Canadian exports to the US have dropped following tariff impositions, but our overall exports have not dropped. There has been a noticeable increase in trade with other nations, such as record high exports to non-US countries in May, with notable increases to the UK, Singapore, and Italy. Here's an example reported on CBC. Alberta beef is entering Mexico's Costco market, where US cuts once reigned. Now, this is a direct result of Mark Carney's negotiations directly with the president of Mexico, where they agreed that Canada and Mexico would focus on more direct country-to-country trade, excluding the US. This way, we avoid any uncertainty with tariffs, and we can increase our trade between our two countries. This is a positive step, which I guess really benefits Alberta. So there is a big restructuring and realignment going on in the whole world. And I haven't even talked about when the world realigns its military spending, which is a huge number. Some negotiations and some announcements have been made on that. That's going to really affect the numbers, shuffling them around for most countries in the world, but very negatively affecting the United States. But one thing that Canada cannot ignore is that there is one sector that is particularly being hit hard in Canada where we simply don't have an option to pivot. This latest headline here, GM to stop making electric vans in Canada in another hit to a key industry. And it came just a week after car maker Stellantis said it would move the production of a new vehicle to Illinois from a Toronto suburb. This was reported in the New York Times. And it is a fact that the Canadian auto sector is the one sector that is completely exposed in this new tariff world, because the Canadian auto sector is a sector that completely relies on the United States as a customer. And the United States has taken the position that it will charge tariffs on cars manufactured in Canada and imported into the United States. And I showed this chart and did a detailed discussion about this in a previous video, which I'll link in the top right corner of the screen. The reality for Canada is that we don't rank very high in the list of powerhouse automobile producing nations like Germany, China, Mexico, and Japan. Are you surprised that Mexico is among the top 4 profitable exporting auto manufacturing countries in the world? These countries are export powerhouses. Let's just look at Mexico here, which exports $160 billion worth of vehicles every year, and it only imports $65 billion, giving it a trade balance of positive almost $100 billion. Mexico is an export powerhouse. Whereas Canada sits down here, the value of our exports is about $60 billion, but we import much more than that. We import $90 billion worth of vehicles. Canada is in the situation where we export almost all of our vehicles to the United States, about $60 billion worth a year. All of those going to the United States, and all of those exports will be subject to tariffs now. So the demand for those exports will decrease. And that's the only market really that we have. So this number is going to decrease. We import more than we export. We are a net importer and have a negative trade balance in the automobile business. Our auto industry is very closely linked to the United States here, which also runs a very high trade imbalance. And the USA's plan is to decrease the value of their imports. They import almost $400 billion worth of vehicles, giving them a very high trade imbalance, a negative trade balance. And the USA's plan is simply to lower this import number by not importing this $60 billion worth of vehicles from Canada. The United States wants to kill this industry so that this number decreases, so that they have less of a trade imbalance. And it'll be very difficult for Canada to pivot these exports to any other country because our auto industry is simply uncompetitive when compared to countries like Germany, China, and Japan. There's no other market in the world that really wants to buy overpriced cars manufactured in North America. That's why the United States has such a hard time trying to create a positive trade balance. Nobody really wants to buy US cars around the world either. The US is the world's largest net importer of vehicles. So what does Canada do? Basically, the best way for us to defend our auto industry is to simply stop buying cars that are manufactured in the US. We need to boycott buying cars manufactured in the US, just like we boycotted tourism to the US and boycotted buying US alcohol and wine. We've basically crushed the US tourism industry and we've crushed the US wine industry. We've taken away their profit margin because Canada's the biggest purchaser of US cars. Go back to this chart here. Canada imports $90 billion worth of automobiles a year, almost all of them from the United States. And if you look at the value of the US exports $144 billion worth of cars. We buy almost all their cars. We could crush their auto industry by simply refusing to buy their cars. So instead of whining and complaining and saying that Canada's broken and spew all this doom and gloom and what are we going to do and let's try and change Donald Trump's mind, the answer is within us. We're the consumers. We hold all the cards. Other than a house, an automobile is one of the biggest investments that any Canadian will make. So why the hell would you want to give that money to the US economy? Just simply pivot, boycott US manufactured cars and buy cars that are manufactured in Canada, buy cars that are manufactured anywhere else in the world. Germany, for example, or for me, Japan. We aren't allowed to buy Chinese cars. China is the second biggest exporter of cars in the world, but we're not allowed to buy them. Or I should say, we are allowed to buy them if we pay a huge tariff. We're imposing the same restrictive policy on China as the United States is imposing on us now. We have tariffs on Chinese EVs, and the narrative is, oh, those Chinese, they subsidize their manufacturing, and they want to flood the market, and they're cheap, and we have to protect our industry. But the US is doing the same thing to us. They're saying, well, we're going to tariff Canadian cars because those Canadians, they're trying to steal our jobs and we want the manufacturing to come back to the United States. We're going to have some serious talks with the Chinese. And I'm not just talking about simply dropping the tariffs on Chinese EVs. It's going to have to be a more intense discussion, perhaps encouraging them to manufacture and set up some facilities here in Canada and replace some of the manufacturing that's leaving Canada going back to the United States. Tariffs are causing a restructuring of all trade and supply chains around the world. And the industry that's at the highest risk in Canada is the auto industry. The US has made it clear that they won't back off on this. But let me again speak directly to Canadians. We have the power to absolutely destroy the US auto industry. We do, all of us, 40 million of us. We do. We import $90 billion worth of cars from the US every year. If we just stop buying them, the US is crushed. They'll be begging us to come back as consumers. And at the same time, if we change our purchasing patterns and we buy cars that are manufactured now in Ontario, those factories will be booming and they'll probably have to be expanded because Canada represents a fairly big import market for vehicles. We're a very affluent country and we buy a lot of cars. We are a big consumer of vehicles. We hold all the cards, and our politicians have simply not understood this and haven't relayed really how powerful our position is. At the snap of a finger, we crushed the US tourism industry, the foreign tourists that enter the United States. At the snap of a finger, we've crushed their wine industry, wine exports. We were their biggest wine export market. And believe me, if Canadians get on board, at a snap of a finger, we can crush their auto industry. We just need our politicians, Doug Ford, to start spreading the message, buy Canadian, support our own industry. And we need our federal government to start diversifying, to start talking to other countries like Germany and Japan and China, the big auto producers in the world. Come and consider manufacturing some models in Canada. We represent an almost $100 billion market per year. We need our politicians to start thinking about these options rather than just complaining and crying that the US is treating us poorly. We hold all the cards in this issue, and we don't even realize it. The US is specifically targeting the Canadian auto industry with tariffs because they want automakers to shift their manufacturing facilities to the United States. Well, we Canadian consumers, 40 million of us, could crush that industry's profitability. I may have to make a separate video with this specific message and list all the option car models that are manufactured in Canada or in other countries around the world other than the United States. Put that video together and release it with the hashtag Boycott US Cars and have you all share it and start a movement here in Canada. Because the best way for us to fight back against the United States is not to wait for our government to save us or for our government to give us bailout packages. Our government's going to do as best as it can to negotiate some deals or some arrangements with the United States and set up different possibilities of trading with other countries to set the stage for us. But Canadian companies have to take it upon themselves to pivot and diversify. And Canadian consumers, we can speak with our wallets. We have total control. Anyways, that's my video for today. I hope the message resonated a little bit with you. Subscribe to the channel if you're enjoying the content. And if you want to support my work on a monthly basis, consider becoming a channel member by clicking the join button. Share the video if you'd like others to hear the message. Have a fantastic rest of your day, and I will catch you all on the next one.